We're joined this morning by Tarun Chug, who's the Managing Director and Chief Executive Officer of Bajaj Life. Tarun, thanks so much for taking the time and pleasure speaking with you. Just the idea, and beyond the FDI, which, okay, for the system as a whole is positive, you have more entrants, etc. But I want your opinion on the commentary on commission structure, because the big complaint that a lot of people have is mis-selling of these life insurance policies in particular, because of the front loading of commissions, 30 to 50%, in some cases more than that, paid out in the first year. The incentive to mis-sell exists. How do you see that transitioning? Do you see it happening as a consultation? What's the role of the IRDA? Please tell us.
Yeah, no, thank you. Thank you for having me there, Neeraj and Tamanna. I think the statement you heard from the finance minister itself, that more regulatory oversight, hence more powers to IRDAI, and more standard operating procedure around making the regulations where it will be consultative. I think that gives a lot of comfort to the sector, because yes, there is work that needs to be done on the commission regulations. And honestly, it's an evolving process. The sector is, while some may say it's 20, 25 years, but for a product which is for 40 years or 50 years, it is just 25 years. Hence, this evolution of through discussion, and with IRDA having an oversight on what should be the commission guidelines, and how should we maybe look at commissions. Should they be less front-loaded, more related to renewals, and how much should there be in all, I think is moot points that will be discussed, I'm sure, led by the IRDA. And all of these are very pertinent points, because all said and done, while insurance products are front-loaded, over the lifetime of an insurance plan, the commissions actually are sometimes even lesser than the mutual fund. So this is something that
Tarun, I take that point. And by the way, this is Alex. I take that point that eventually spread over that, but that's assuming that people hold for the entire term. And the fact is that people don't, because they're sold GIMP products, they're sold bad products. Do you see that changing? And you know, a move maybe to more protection rather than investment?
I think, yeah, see, the move to more protection is already starting, Alex. Sorry, I got your name wrong. So, and the entire bit around protection is actually going up. More and more protection is happening. And all said and done, protection after the GST removal has become a lot more attractive. We as a company are seeing a significant climb on the interest in protection. And I see it only just go ahead more and more. All said and done, there is no pertinent piece of data that we need to look at, that an Indian consumer, the median Indian consumer, is 29 years. Now, 29-year-old usually does want a saving component, and that's what we've seen all across the globe. And even in older, older age communities, even in the US, for example, it is not all protection. Hence, when they want a packaged product, I know the discussion around the savings part gets overloaded in our dialogues. And yes, there is a clear need to add more protection layers to it, which the sector is doing. But the consumer does want savings and term together, so that once everything is okay, they want the money back. Lots of times you see that we've paid for health or life insurance, and we've been paying for X number of years, and we paid so much money, and they said, hey, we're still alive, nothing's gone wrong really, right? So, but I've wasted that money. So I think that which is a living benefit, as we call, and bundling savings and term, and with the FDI coming in with more interaction, more data, more foreign companies also coming in, I guess more type of regulation is required to get such products in. On the point of mis-selling, I know it's a issue in not just the insurance sector, but in practically every financial services stream. We get singled out, I think, a little bit more. But there is a lot of things that go into it. And the ecosystem around mis-selling is something. It is to do with a lot of instigation as well that happens through distribution because of the front loading. So there is an element there, of course. And we need to sort that out. So it's not just one thing always that works,
Yeah,
Alex. There's always a lot more things that come into action.
got it. Tarun, now this is Neeraj, and good morning. Good talking
Yeah,
to you.
okay.
Yeah, been a while. Just
My
wondering,
apologies.
so various notes and various opinion out there would want yours, because one of the assumptions or one of the views is that while the street is factoring in scenario of rebound of the current EOM regulations, some people believe there is a low probability of the regulator backtracking on that, because the regulator always had the power to set those limits, but they haven't for a reason, for driving penetration. What's your view there?
I think you raise a pertinent point again there, Neeraj. I really like the fact the way NDTV does decipher the sector. The fact is, it is a complicated set of things that come to play. There is a relevance on the EOM, particularly when it comes to traditional plans. There is a clear relevance there. And there are participating plans where EOM is nothing but the boundary wall within which you work. Because they're participating in profits with the customers. Hence, I don't see EOM going away, but I do see some discussion on the commission side to make it within the EOM a lot more palatable. I think the new IDEA chairman has been particularly talking about overall reducing cost of selling insurance, and I think that's a very, very moot point, very important point, and the sector is focused on that. For that, like I said, there are multi-tier regulations that need to sort out things. I'm happy that we could resist the multi-tied agencies, because that would have just taken the cost up in the marketplace that we are in. Lots of people all of us spend a lot of money in training advisors. So there are, there is a lot, many layers to the onion. And as you unpeel it, a lot of work will have to be done in each of those regulations to bring down costs. And UM, of course, shall remain.
Tarun, hi, Tamanna here. I'm going to zoom out a little, and if you look at it as an overview, for companies like yours, the fact that the composite license has been pushed down the road, a positive. The architecture of how agents work has not really changed, a positive. 100% FDI, how do you look at that? If I had to ask you in very simple terms, what does this new bill mean for your company and the sector? What would you say?
I think we couldn't have expected a more positive one, Tamanna. In every aspect, it is right there. While the composite, so I'll just take it point by point, while the composite has been pushed a little further, as you're saying, there is a proviso that is kept in the regulation, the point number 5, where they say that any other kinds of insurance licenses. Now, I have a gumption that this could actually be a combination of a little bit of life and a little bit of health and a little bit of value-added services. I find the bill and the act this time actually quite progressive, very, very progressive, because they could have just cast it in stone. And the sector is evolving. It's still a very young sector. So giving all that capability to IRDA to get into the minutiae, which on an act on a piece of paper might look minutiae, but actually is significant in terms of how it impacts the sector, I think is a very, very positive move. The second part around the fact that, of course, maybe the composite, we have to still take a call as a group what we do. So, but I guess there is something for Bajaj General to do, something for Bajaj Life to do, and there is some places that products are synergistic, and those elements is what we would maybe want to go to the regulator to talk about more and more. The fact that the second guideline around tied agency remaining tied, I think that is quite good. Our agencies are very strong, and we really are investing in our agency force every year. It really goes in the right direction for our company, hence, because the cost of training an agent over a period of 4 or 5 years, Tamanna, can be as high as 15 to 25,000 rupees per agent. Now, such being the cost, I mean, if agent you would kind of groom from the start, and suddenly
He's selling something else.
Is selling something else.
Yeah.
Is not just to us and the all the companies who've invested all this money, but to the entire sector. That's a negative here.
Okay, so it's called a Raksha bill. The name of the bill is basically to give protection to consumers, but I think, so Sabka Bima, Sabki Raksha bill is the name of the bill. So there's protection to consumers, and I think in some part, companies have also been left largely unscathed. So that's good to hear. Thank you so much, Tarun, for speaking with us. Always a pleasure.
Thank you. Thank you, all of you. Thank you so much.